What's up, and welcome back to another episode of talking all things financial and investment. So I linked up with a good friend of mine for a few episodes. His name is Bret E. He is an actor, he is an entrepreneur and an investor. He's into stock market investing and Airbnb and owning rental property. And we are talking all things financial for a few key episodes. I'm glad that you are here. I hope it adds a lot of value to your life. If it does, drop us a comment, like this video. But hey, let's get into the next episode. Here it is. We are live. What's going on, everyone? We are back with a brand new episode. Bret E, what's up, man?
Oh yeah, let me get 2 claps and a Ric Flair. Woo!
I like it. I like it, man.
Yeah, I just want to say to everybody, konnichiwa, ni hao, hola, and hello. I am Bret E, the most positive actor, checking in with you.
Absolutely, man. We're back for a brand new episode. You all hope you all are ready for what is about to happen. Make sure, if you haven't done so already, we are 4 episodes in now. Make sure go below, click that like and subscribe button, and turn on that bell. That way you get all the new videos, all the new hotness, so you are missing out on nothing. So go ahead and do that right now while my man Bret E gives you all the disclaimer.
Yes. Okay, so everybody, do your own research. We are not financial advisors. It is up to you to know your own finances and do your own research, decide what's right for you and your family. We are just letting you in on the conversation that we have like every other week. So this whole channel is made to help the person that has been very, apprehensive about getting into the market, or maybe scared, or, didn't feel like you had the right knowledge, to helping you take the steps to empower you to feel comfortable taking your first steps into the market.
Incredible. So there you have it. The disclaimer is out there. It's been shared. We're on point. Let's get into this today. Quick recap from our last episode. We did a incredible episode. Bret E broke down this incredible grocery store mentality. Listen, for all of my beginning investors, if you missed this, you have to go back. I'm not going to give you all what it was about, but this grocery store mentality just speaks just very briefly to how the things go up and down and things are on sale but the way he broke it down, I'm telling you, was genius. So make sure you go back and watch the last episode. We also got into ways to research ETFs. We talk about ETFs a lot. So if you are familiar with ETFs, exchange traded funds, go back, watch the last episode. We got into it there quite a bit of how you can begin the process of investing, because we want you to win, and to win big, right? And so on today's episode, it's going to be special. It's going to be special. I know you all are thinking about investing. Your mentality is beginning to shift some as it pertains to investing. And what happens with that too, though, is that you may start having something called, you're seeing on your Twitter, your Instagram, your Facebook, wherever else it is, you're seeing multiple things happen, giving you so much information about stocks and crypto and NFTs and options, and you're seeing all this at once, right? And it's a lot coming at you at once, and it can seem a bit confusing at times. And so let's remove the confusion, right? Bret is so good at explaining this. I'm gonna turn it over to him. Bret, help us we have so much coming in at once. How do we deal with, man, just all this info just bombarding us, man?
Yeah. So whenever we start getting into an area, right, that we're interested in, all these things start popping up that try to like help us find more of what the internet thinks we're looking for. But what that can lead to is what we call information constipation. That's why we're putting this episode around ways to weed out all of the information and just to stay focused on the first goal, which is just building out your base, right? You want a strong, stable base so your house is not built on cards, right? You want it built on steel, like solid foundation. So just stay the course. One of the mindset things that I like to talk about people with is like the 90-10 rule, right? So 90% of the money, first of all, taking a step back to like the very first episode, right? 100% of the money that you put into your stock account should be money that if it evaporated in one day, it wouldn't even affect the rest of your week, right? So you're not betting like your rent money on the stock market or anything like that. This is just like slowly over time. And so with the 90-10 rule is 90% of that money you want to be going towards the very stable, like we were talking about, like ETFs, things that are strong and dispersed, diversified over a bunch of different companies so that you can sleep at night, right? This isn't something like Alex and I are talking about long-term investing, 3 years, 5 years, 10 years. We want you to be able to sleep at night and not worry if your money's going to be there when you wake up, right? And then with that 10% that's left over, you can start making maybe some individual plays when you feel comfortable. So like we were saying in the previous episode of taking an ETF, looking at like Googling the top holdings in that ETF, and then from there, maybe making that helps you make a decision on what companies might be good ones to invest in, like the individual stock category. So like buying one share of Apple or working up to getting one share of Apple by doing the stock slices that we were talking about.
So good, man. So good. Like, is that something, I'm just curious to know this. Is that something that you dealt with, like, once you like started investing? Do you like recall like, some of your earlier experiences of that? Is that what you went through as well? As far as
Yeah, because one side of your mind is trying to find the next big thing that's gonna blow up, right? Everybody wants to do that. And I was guilty of doing that myself, absolutely, without question. Until you start realizing that the vast majority of people that are wealthy, they focus in long-term plays and they focus on things that are like steady winning the race, you know, like being in the marathon mindset versus like the sprint mindset. And so I was involved in the market almost like kind of like in the early infancy of cryptocurrency was probably going on, but I wasn't aware of it at that time. I've been in crypto for probably maybe 3 to 4-ish years. So a lot of things come at it, and it's important to just stay focused on the goal at hand and just stay the course.
you said you've been in crypto for like 3 to 4 years?
Something like that. Yeah. I remember like when I first got into Bitcoin, it was somewhere around like 8 to 9,000, somewhere around there. Now I didn't jump in, you know, but that's when I first started putting money towards it. But I do remember like that was kind of like the entry point in my mind where I put a marker of like, okay, so this is where I'm first starting to get in.
That's incredible, man. I think at the time of this video we're recording, it's like around 40-something thousand.
Something like that.
Damn, man, that's huge, man. So Bret, go ahead and give us what's going to be the next big crypto? I'm just kidding. I'm
coming out with a Bret coin I'm just playing.
Oh, that's good. That's good, man. That's good. I like it. I like it. I like it, man. You were sharing with me about a concept before we started about this parody concept. Can you share with them even further about what you were sharing with me?
Yeah. So one of the things that happens when we were talking about a previous episode of like when everybody's running into something, that tends to be when most people run into it. Like with the crowd, right? So breaking it down to the idea of parody first. So I was fortunate to get parodied on Saturday Night Live. And it's something that's on like my YouTube channel. Very funny thing that happened. How that happened is that I'm in a commercial for a company called Angie's List, and they played that commercial so much in so many places that it was like everywhere. People were seeing it all the time. So much so to where Saturday Night Live made a parody of the commercial. And shout out to Kenan Thompson. Kenan played me in the commercial. I was very honored to see that come up, and it was funny. It was hilarious. But they took that because it was everywhere, and everybody knew about that commercial. So how we take that and look at it in the stock market is that when you start seeing everybody talking about a concept, or so like back when, let's call it like 2000, maybe 6 or so, somewhere around there, when like the real estate market was just exploding, and everybody and their mom that you knew of was getting their real estate license, right? And then like people that you're like, that's checking out, when people are like that are checking you out at the grocery store are talking about like they were getting their real estate license. Moms and aunts and uncles that like had no business, like had never talked about it before, they were talking about getting their real estate license. They were like, all these things were happening. Whenever that happens, it's becoming to the point of parody. So when everybody's talking about it, the gig is probably up, right? Like it's probably squeezed just as much juice out of that orange as is possible. So in the stock market, whenever you start hearing somebody talking about a certain stock, and everybody's talking about it, like your Uber driver's talking about it, your next door neighbor that never even had a stock account is asking you about, like, what's about this stock? Then that's probably the time period where it's like, that's when the ones of us that got in early, we are starting to take out our profits and start to reduce our position in that stock, because now, like, once everybody's in on it, there's like almost nobody left to get in on it, right? So that's when you should be starting to look at the idea of like taking some profits at that point, when it's like in the news every day and everybody's talking about it. That's when you should be looking the other way to see what opportunities are over here that the people that rushed in aren't looking at now. That's going to be the next wave, versus rushing in when we see everybody's talking about something and then we're wondering like, oh, I got in at the top and now it's starting to drop.
That's on point. Brett, that reminds me of like when it comes to trends, right? And you think about say a fashion trend or a shoes trend or whatever it is, a car trend, who knows? So like whenever you start seeing it in a number of places and it makes you want to get that item, and you feel like you're going along with the trend and you're fitting in, and it's like it feels like a good thing when you're on the trend that way, right? But when it comes to this market, as far as being an investor, what you're saying is we don't want to try to ride it up when it's like super popular or whatever. It's like a different, this requires, to use one of your words, a different mindset. Like investing is just, it's different. It causes us to think different, so that we can grow differently. And so, man, I really like how you brought that down, man. I think that's on point.
And your clothing thing that you brought up, that made me think of like, so let's say when we were all into a certain type of shirt or a certain type of whatever, the second that you see your grandma put on that shirt or those shoes, it's over. So like once grandma, she killed it, right? When grandma or grandpa are wearing whatever shoes were the hot shoes, then it's like, oh, okay, now we got to move on to something else.
Absolutely. Absolutely, man. I 100% agree, man. And that I tell you, I want to really like get into something right there, and it's something that you and I talk about a lot. So essentially, like these trends, this stock market. I don't want it. We don't want it to be threatening to you all. We want it to be something that you grow in, we get educated about, we learn about to maximize like all that it offers. And so, Brett, I want to get into this a little bit about like markets and like that
Yeah,
whole thing about like something that you all may have heard about or may not have heard about, but it deals with like bull and bear markets, right? So let's get into this. So
yeah. Talk
now,
to people.
so like everyone knows, well, most people know, and you've seen a bull. Just think about the animal, the bull, right, with the horns. You see the bull, with the red. They throw it back. Like you seen a bull charge at red, right? You've seen bears, right? Bears tend to be an animal that eats certain foods, and it tends to it can stand up, but it tends to be on four legs, and when it's ready to charge or move forward, it kind of goes down. Well, when it comes to the stock market, you may hear it referenced as a bull market or a bear market. So, in very simple terms, here's why we want you all to get and understand this. Is because in order to grow as an investor, which you already are, you have to know what type of market you're in, or have a pretty good idea. Hey, are we going up or are we going down? Because when bulls fight, they again do what? They charge up. So in a bull market or green, when it's green, that means we're going up. A bear kind of fights down. So if you see red, that means we're going down, right? And so like bull and bear markets are key in our growth because it helps us understand which direction we're going in, which affects you all because you may have invested in something and you want to see it like skyrocket, right? You buy something and you want to see it just fly. Like it goes from
To
like
the moon. To the moon.
I put in 50 and it went to 500. Like we want to see it do that, right? But understanding that when it comes to this market, things again, as Brett mentioned earlier, they tend to move up and down. And so at the timing of this particular video, we're in what most would call like a bear market, most would say. And nobody really fully knows like, hey, are we out of a downtrend and going back up again? No one fully knows. And so if you are investing, which I hope you are beginning to invest, understand that there are some good buying opportunities out there for you to get into, which is why we highly encourage the concept of ETFs, right? And so that way you can find out the best of the best in a particular sector. And so I think that's like really, really key in order to move forward. Brett, like markets are most people have been to like a
Uh-huh.
garage sale, a flea market, a mall, shopped on Amazon, something like that, right? We shopped somewhere where
Mm-hmm.
wherever you shopped, that was a market. Things were bought and sold on that market. You all, if you know how to buy clothes on sale, you already know how to invest. You already get it. If you know how to find good deals, you already know how to invest. If you know how to wait until a certain time in November where sales are incredible, and so you may put money aside, wait till the price drops, and then you go in and buy it. If you know how to do that, you already know how to invest. Now it's just time to switch your mentality towards now I'm going to buy things that make my value go up. That's all this is. That's all this is. Brett, man, what are your thoughts around that?
Something that I like that you do really well, Alex, is to talk to the people really quick about when you're looking at like 1 year charts or 3 year charts or 5 year charts and
Mhm.
how to like look at the bear and the bull market aspect of that.
Yeah.
Just talk to people about that because I like how you explain it. It's better than me.
Absolutely, man. No problem. So if you all have a phone of any sort, doesn't matter what kind of phone it is, there are some apps you can put on your phone that will really help you as a beginning investor. Two that I particularly like. One is called Yahoo Finance. Get that app. The other one is the CNBC app, right? So one's Yahoo Finance, the other one is CNBC. Download those two apps. When you open that app, and so you put in a stock of any sort, Apple, whatever it is, or ETF, whatever it is, what Brett's referring to is it's going to bring up a chart for you. It's going to say like 1 day, 1 month, 1 year, 5 year, etc. And so when you're determining whether we're going up or down or the quality of that stock, what you want to do is this is you want to go wide first and then get more narrow. And what I mean by that is you want to get a wider time frame, 5 years, 10 years, to see, is this stock doing what? Going in an upwards direction. We want that. We like up. We don't want down. We want it to go up. And so start wide, 10 years, 5 years, and find the trend. And then you can come back to the smaller time frames, which may be like a month, a week, a day even. Because if you can find a good dip where it's dipping down and you can buy at that dip, oh, we taking off. We taking off. And so that is so remember this: start wide, then narrow in. Start wide and then narrow in. The wide just gives you we're going in this direction. The narrow part gives you the idea of when you should get into possibly that particular ETF or a stock.
Yeah, man. Love how you explain that. Like even when I'm talking to other people about like just the overall concepts of the market, I go back to when the way that you talk about that, and I use that to explain to other people. So that's why I was like, I can't explain it better than Alex. I'll just let Alex do it. Just let Alex be Alex.
Great. My bad. I forgot one thing. Can I add in one thing real quick? Yeah. If you use, I don't know if the CNBC app does this or not. I'm not sure. But on the Yahoo Finance app, you can also add in a alert. So say you want to buy a certain ETF or stock at a certain price, and y'all busy. You don't have time to look at your phone all day, right? So you can set an alert. I want to buy this stock, this ETF at this price. You can put an alert in on Yahoo Finance, and it will text you, or it'll show it in the app itself when that particular item hits your price as well. So my bad, I forgot about that as well. So alerts.
No, you're good. You're good. When we were talking about the idea of like looking like wider and then focusing in, wanted to update you all on our 100 shares of Apple marathon that Alex and I are in. So that's the long-term goal, right? We want to knock out 100 shares. Like we were talking about before, eating an elephant one bite at a time and just slowly working it down. So, and then you all are free to join in with us along that marathon. And, you know, it just makes everybody better. So in the micro part of that marathon, the zoomed in part, currently, I'm still edging out Alex just a little bit. Alex is gaining ground, and I'm trying to I'm in the process of holding him off, you know, but we're both gaining ground, and it's just a cool, little competition. And you all can start with your friends, you know, a competition of getting the first to get 3 shares of an ETF, for example. You know, start with something simple that's manageable over a small amount of time with an overall goal maybe of being, 10 shares of an ETF that you like. And then once you get there, move on to individual shares, but find a buddy that, like we were saying before, maybe it's your wife, maybe it's a husband and wife, right? Or find a buddy that you've reached out to, like we were talking about in previous episodes, reach out and start the conversation of stock and investing and things like that, and find somebody that you can have accountability with, and that'll help. You all, iron sharpens iron. You all keep each other in line.
That's good, man. That's
But yeah, so Alex, say again.
It's like it's like accountability, good accountability.
Yeah, accountability partner.
That's good.
So along with that accountability, Alex, what are like a few or like a couple, maybe just a couple action steps that we can have kind of like on the button end of the episode of what people can be doing to further along the path to keep it going?
Yeah, let me first say I'm like big mad that you're beating me right now. I don't like I don't like being down. Like I don't really. In fact, episode I'm done. Oh man, no, I love it, man. Like you bring out the best in other people, and so man, I'm excited, man, to be on this Apple 100 marathon with you, man. But yes, so to answer your question, man, I think that's a phenomenal question. So here are some action steps, some takeaways. So make sure you have your pen out, your pencil, your tablet, your phone, whatever it is. Let's get into this right now. Here's what we want you to do this week. Okay. First step is I want you to go and research the top ETFs. You can Google it. Like just Google top ETFs, right? And you will see something called holdings most of the time when you go to a site. Now, in fact, I'm gonna put y'all on one that I go to often. You go to www.sectors SPDR. So sectorspdr.com. It breaks down different ETFs by sector. So you're in the healthcare field, or maybe you're in construction. If you're in financials, whatever the tech, whatever the industry is, it breaks it down by sector. And then after that, you can go in and look at who holds that particular, what stock is in that ETF. So go check it out, go in and look at it and get a good, clear idea of the top ETFs. Because here's the next part of that. This is just step two. That's step one. This is step two. We want you to then, whatever the top 2 or 3 are in the ETF that you look at, make note of them, and then actually add them to your watch list. Okay. So in whatever platform you use, it does not matter what you are going to use soon or already using to make your purchases, your trades. They all have a watch list. Yahoo Finance has a watch list. CNBC has a watch list.
Mm-hmm.
Add the top 2 or 3 in whatever sector you're thinking about. Add them to your watch list so you can start becoming more familiar with how things move. Bret, please, man, shine some light on this even more. But that watch list is a game changer.
Yeah, that's excellent, Alex. It's excellent. Another way that you can also use that is, so like you're checking Instagram more than once a day. If we're being on, like people that we're talking to the audience, everyone's checking Instagram or checking TikTok or whatever, probably more than once a day on average. You can add those things to your watch list and just check it once a day, or check it at lunch, check it at night before you go to sleep. So that way you start seeing how often or what span that the stock moves in a given day. It normally stays between this range every day. And then you zoom out a little bit every week. It normally stays around like this kind of range. Every month it stays around this kind of range. So you start getting an idea of when you see a quick dip happen, you're like, wait, that's not normal. And if you still believe in the company, let's say if we're talking about Apple, and you see a dip down below something that you've been checking it every day, a couple times a day, then that's a sales opportunity that you've caught that maybe most people that aren't watching it, maybe they check it like once a week, maybe they miss that little dip down and come back up. So you can start being familiar with how often and how fast or stable the stock moves.
That's good, man. That awareness, man, you broke that down perfectly, man. That's it. Brett, you give game, man. Every time we give episodes, man, you hold nothing back. You get
You
all
give
in.
game. You give game.
That's so good. That's so good. Brett, man, we're coming in. Bret E, we're coming to the final moments, man, of episode 4. Is it 4 or 5?
4.
4. Episode 4. Man,
4.
episode 4. Man, any final just words of advice at all, man, as people are walking away from this, like any just final thoughts or words, man, that you have?
Just to start taking steps. Like, as we're talking about information constipation causes us to focus on all these different things that are going off and not taking steps, not taking action. Just start taking action and start the process, start moving, and you'll learn. You'll probably learn more once you start putting a little bit of money in your account and on the line, and you've got something on your watch list. Just start making steps forward.
Absolutely. Man, I 100% agree. I think the absolute only thing that I would add to that is, and Brett and I talk about this often, is that we're realizing that we have various groups of people that are tuning in, which is a beautiful thing, of various ages and ethnicities, and it's incredible to see. And so my only thing, I hope that what you all are hearing is adding value, is impacting you, and just simply do, I think, what Brett would just say. I think you absolutely nailed it, man. And so we're just thankful that you are growing with us, and that as you are beginning to take beginning steps to get involved, listen, drop it in the comments. Let us know what you're doing, what possible moves you're making, or even thinking about making. Like, we want you to grow with us on this journey. Don't forget to subscribe, like, and turn on the notification bell so you get all the new hotness. Go back, look at previous videos, tune in, lock in, and let's keep growing together. Bret E, you the man. We're signing off, man.
On the way out, I just want to say to everyone, sayonara, zaijin, adios, and we'll.
That's good, man. Y'all have a great one. See you in the comments. Peace.